The more in tune we get with client preferences, the more we can interface with our clients, the better we can form relationships. And those relationships don't have to be human. They can be digital. I think the better the products we'll be able to offer and the better we'll tailor our digital experience to client expectation.
Not everyone makes the news, but behind every growth-driving experience, product, and transformation are experts who shape the outcome. Welcome to Behind the Growth, a podcast for digital leaders and those aspiring to become one. Each episode features a candid conversation with a remarkable individual. Join us as we focus on their struggles, wins, and lessons learned you won't find anywhere else. Let's get started.
Welcome to Behind the Growth. I'm your host, Mudassar Malik, and today we're celebrating Nelson DeJesus, Senior Vice President and Chief Information Officer at CIBC. He brings over 2 decades of experience in the Canadian banking sector, combining IT and strategic leadership. Nelson, thank you for joining us today.
Thanks for having me.
Wonderful. Nelson, I always love to start with learning more about our guests and their career journey. And specifically for you, what inspired you to pursue a career in IT and banking?
Yeah, it's a good question. I'd like to tell you that I had a big plan and this is where I thought I'd end up, but that's not quite right. So I started when I was, 24 after my undergrad, took a role at a mutual fund company that no longer exists. And within 3 weeks resigned because it was certainly not the thing for me. I ended up walking home that day and surprisingly enough ran into my brother. He was having lunch with someone from HR at CIBC. And she said, well, what do you want to do? Because he asked me, where are you going? I'm going home. Aren't you working? No, I quit. Okay. And so she's like, what do you want to do? I said, I'm not sure. I know what I don't want to do, but I don't know what I do want to do. So she said, well, look, I'll give you your email address. I'll send you some stuff. And she did. And I think, within maybe a week, it was really, really quick. I'd taken a job at CIBC in Wood Gundy. And it was a great thing. And I did it for a couple of years. It was a mix of tech and some other stuff. Then moved briefly to the trade floor, which, again, a trade floor in 1999 was an interesting spot. And then ultimately left the bank for another opportunity. And I'd always worked across groups. It was a priority for me to learn as much as I could. So I've worked within capital markets. And from 2000 to, not very long ago, I've been in one way or another associated to capital markets. I've worked in risk, I've worked in finance, I've worked in middle office. Technology proper since about 2007, which I guess now is, the bulk of my career, certainly more than half. And yeah, so what sort of drives me? I think everybody that we work with is smart. And so that's not really the differentiator. Certainly there are some, extremely intelligent people and some people who maybe are not quite as, but I have yet to meet a person who isn't smart. Fewer people have vision plus work ethic. And then those who can collaborate, that's sort of the trifecta, right? You look for those 4 things. And I've had the good fortune of working with a number of people who've, been excellent models and who I've been in many ways able to kind of attach my career to as well, which is important. You need sponsorship. So absolutely. I think combination of always trying to do better. And I do believe, as a mantra, can I do better tomorrow? Not simply at work, but in terms of my interactions with, my family, my interactions with my friends. Can I be better than I was today? If you can live that, and some days are harder than others, of course, and the work is interesting, the people you work with are good, the person you work for is good, and you're compensated at a level that you think is fair. Those are effectively the ingredients, I think, for the right recipe. And I guess the last thing I'll say, if you care, it tends to show. And as I said, I'm not someone who's ever managed my career. I've never said, this is where I'm going to go. In fact, I think I've only done 2 interviews in my life. And somehow, I've done okay, I guess. So it's some sort of model, just not the one that you typically find.
Wow, but literally, I could spend the whole podcast just unpacking and talking about so much of goodness that you shared there. Like, I'm just thinking from right off the bat, knowing what you don't want is such a huge thing. So many of us have not been able to really understand and think through. So that in itself is such a huge thing. And then I think you just over the years, your career is you've become an institution within yourself. The amount of know-how and how much you've been able to experience, that's phenomenal. So I think we'll keep on leveraging and we'll keep on picking up on those pieces that you have. Anything significant that you feel that there was a specific moment that really shaped me who I am today.
Yeah. I mean, again, I'll limit this to my working career. I would say, yeah, and it was in 2006. So in 2006, I'd spent a lot of my career in what I'll call BA type things. So, getting a decent understanding of what the business is doing, getting a decent understanding of the tech, and then really striving as hard as I could to create implementation vehicles that were, as optimized as they could be. So whether I, again, was in finance or risk or technology or, I spent a bit of time in operations as well, I'd say that was kind of the way that I normally approach things. And if you're good at something, typically people will give you more. That is, that's the one constant. And so I picked up a bit more. But I never really moved past the knowing how to do things on my own and learned that you need others to do those things as well if you're going to actually be successful. And so I think my team had probably gotten up to something approaching 100 people. And, I was working 18-hour days, 7 days a week. And I don't think I had a very happy workforce in retrospect. At the time, I thought they were all lazy because I was working like crazy. But it just wasn't a good situation. And I remember approaching my boss and saying, like, this is not for me. I need to take a bit of a step back. And I think in banking, that's a curious thing. Like, particularly if you were in New York or London, and in capital markets, you deal globally. It's not like other parts of Canadian banks. There is a saying, right? It's up or out. Either you continue to get more or you go do something else. So for someone to say, look, I actually want less, thanks. Again, thankfully, in that case, I had a really good boss. And he said, yep, no problem. What do you want? And I said, well, I'd like to, I think, do this and this. And so a couple of days later, I found myself with a team of 8 and really learned how to manage a team of people and how to do this properly, which forced me to completely change the way that I operated. That team of 8 then, grew organically because we took on a new business. So it wasn't so much that I picked up things that I'd had before or, or otherwise, but, we began to do business X. I won't really refer to what it was. And in time, probably within the next year, the team was back up to 100 people, but this time it was done, I think, appropriately. I think people were much happier. I think that I was certainly much happier. And had I not stepped back, I don't think it would have ended well. Like, I think that I either could have continued to be a very terrible middle manager and stayed at that level and probably not been thrilled. And we've all worked with people like that. They're called the bitter people. And I didn't want to be that. So, I think it does tie a tiny bit back into what you said, like knowing what you don't want to do, but maybe even more importantly, admitting what you're not good at is important because you won't grow otherwise.
Yeah, self-awareness is such a big thing. So I think, again, reflecting on your self-awareness and what you want to do. And then again, what an incredible world. If, how lucky are we if we find those leaders who can actually mentor us and guide us and actually understand and help us reset and recalibrate into that thing. I think that's huge. It's huge. Okay. I guess probably you're not alien to generative AI and all the buzz in the market. I'm sure, it's
Maybe not. Yeah.
So I was thinking that, there's so much of excitement and I don't think it's slowing down. And in a lot of ways, reminiscent of the buzz that we saw for blockchain and cryptocurrencies. And so my question would be like, what do you see? Do you draw parallels? Do you see similarities? Do you see that it's a hype cycle dying out or is it going to be, this one is different? So.
Yeah. So I'll begin by saying I do think this one is different. I mean, blockchain was a little more difficult to understand in that from a technical perspective, many of the elements could be replicated in traditional databases. Not all. Again, elements of immutability are more difficult to replicate, but let's say that there's a reasonable overlap. And particularly the way that banks were approaching it, which was not decentralized, right? I mean, effectively, it was how do we create our own proprietary blockchain? Well, that sort of negated the advantage, in my opinion. But there's a good reason why. Because if you enter 6 billion instead of 600 and you have to settle, that's not going to work. So, there are practical realities why financial institutions, took the approach they did around blockchain. So there was just a difficulty of saying, how exactly does this work? And what are the benefits beyond some of the public use cases, I would suggest. Crypto, and especially central-backed currencies, that offered more promise, in my opinion, because now you could reduce your cycles, from days to seconds. And that is a big difference when you're funding, over multiple days. So I thought that, and I still do believe there is a world where crypto plays a material role. And blockchain is a supporting technology to that. That's fine. But blockchain in and of itself, felt a bit strange. In a way, I sort of compare that to quantum at the moment. Like I see the benefits of quantum.
That's a great parallel.
Like I do. I see the concerns with quantum as well. With you better have fairly good encryption if you want that data to be private, 5-6 years from now when these things come online. But anyway, the point is with AI, there's a general familiarity with modeling. So people understand, like even laymen who have not ever worked with any of the machine learning models will get what it does. So it looks for big patterns of data, and then you've got some assumptions that are built in, and you're basically testing that hypothesis. And particularly people in quantitative fields will know that we've used Monte Carlo simulation for a very long time just to get better predictions. And that really is what AI is how do you get a better prediction based upon the data sets that you know. Now, generative AI is a bit different in that how do you create content based on the data sets that you know? And when I got here, I was speaking to the groups there, and I mentioned Jeff Hinton. So I've been reading a lot of his stuff and watching a lot of his podcasts. And if you get past, kind of the fatalist, the world will come to an end side of it, like there's something to learn in every one of the articles, in every one of the podcasts. And he speaks a bit about backwardation. So, and backwardation being the key that allowed them to make big improvements in large language models. And effectively, that's just filling in the gaps and how to mathematically fill in gaps in your data. And once you can fill in gaps in your data, you can create content effectively, is the thesis there. Now, that does not do his work any justice or his team. This is not meant to be a primer. It's just me chatting. But you think that through and say, okay, so we understand the predictive elements. We also can understand the generative side. Like instinctually, how do you now create data? Well, you're creating data by extrapolating, not just filling in gaps, but now extrapolating forward. I think what we struggle with is, what's been referred to as the hallucinations. So it's erratic behavior. The prompt looks good, but it isn't, and you return something that makes absolutely no sense. Probably doesn't matter much in your personal life when you're asking, how do I
survive that one?
Exactly. What's the best banana sandwich? Like, that's okay. If it tells you walk 30 feet and, drop to your knees, okay, fine. But if you're going to be using it in the medical field, that's a bit of a different story. And so how we get our heads around that, I think we need to get there before the true promise, I think, is available to us. But I mean, it seems relatively inevitable that we're getting there. How do we now prevent those fatalistic scenarios from playing out? Like once you get to the point where, it is that powerful, have you crossed the line that makes it too powerful? And that's the ideological side, which, look, these are all fascinating things to read and to see. But to answer your original question, I think far more relevant than some of what we've seen. B, there are practical contexts in which, very conservative institutions like banks are taking very hard looks, our bank included. And we're not quite there. But you just look at, you had OpenAI release a product. Now you've had Google release a product, then Meta, or actually it was Meta, then Google, then Amazon, now Apple. Yeah, the competition's going to be pretty strong. And I think we're going to get some pretty amazing.
Yeah, there's no way that this is going to be ignored. So I think to your point, like it's heading in the right direction. We're not there yet. And just picking on, you're mentioning a couple of softwares and hardwares also kind of coming into the play. So what about without taking names again, what about some of the mega platforms, and how in context of Gen AI and financial industry, do you want them to evolve, or do you expect them to evolve? Or do you see that they're making an effort in really making some radical evolution to it?
Yeah. Well, I mean, maybe the best case of this, though, is you take Microsoft as a firm and what Microsoft does. And I mean, Microsoft is many things, but I think we all saw the power of a company like Microsoft during COVID and the evolution of the Teams product, which went from not existing. Like, I mean, they had a pretty terrible product in Skype, which hadn't changed dramatically in the 10 years that it was around, to Teams, which has, weekly evolution. And I don't know how strong, because I haven't paid attention to it, but how big of a revenue contributor that's been to the firm, but I'm sure it has been a revenue contributor to the firm. But that was built in-house by them, controlled by them. They handle the content, they handle the releases, they handle the features. I mean, they effectively manage the entire thing. Then, their partnership with OpenAI, I think we can understand why they've done it. Like, they were in a position where they've attempted to go their own route with things like search engines and NLPs and so forth. And they just have never really seemed to be on the same playing field as Google or Amazon, and in particular, Google or Amazon. And so very good. Now they've signed up with OpenAI. I think it's been a very fruitful partnership for them. But you've got now at most a couple thousand person firm in OpenAI, which does not have the governance structures, which does not have client servicing aims, which, is actually even bifurcated, as we know, between a not-for-profit and a for-profit entity, and how ideas and even talent move between those two things. And so Microsoft takes this, builds it into its product, and now they're starting to offer services through their computing platform, through Azure. Well, if I'm going to buy this service, then I want to be sure that they're not going to turn it off tomorrow. And I want to be sure that if they release a new model, that I have time to switch to it. So how they turn this into commercial grade, I think, is going to be fascinating. It's not commercial grade. I mean, Microsoft probably wouldn't like me saying that, but it's not yet. But what we're seeing here, I mean, you think about the early days of the internet, and you had a few dominant companies, but they were really immature companies like AOL. And I can't even remember all of them. I remember AOL quite well.
Yeah, it did really well. It was a big thing. Yahoo and AOLs and all
exactly.
that.
And Yahoo still exists, but it's a shell of what it was at that point. And AOL stopped existing a long time ago. These are much more sophisticated companies with much tighter structures that have been in industry for decades now, in some cases, and know how to operate. So now they've got this tool. How are they going to integrate that into what they do? I think that will be equally fascinating to see.
Yeah, I think a lot of eyes on them, like everyone. Like, I think they have the experience, they have the know-how. But how can this shiny new object be turned into something really super wow? And I think that's where everyone's looking at them. And let's see, it's going to be interesting times.
I'll say this, as a GPU maker right now,
Yeah.
things look good.
Well said. Okay, let's switch gears towards experiential banking. And so your thoughts on smart branches and, also how the new expectation with so much carrying the wave of COVID and the new generation coming in, so much happening as an expectation of the customer. So your thoughts on these areas?
Yeah. I mean, look, super interesting question. And I'll sort of relate this back a bit to capital markets and the e-trading world, right? Like you think about, broadly speaking, you've got a series of product lines in a trading environment. You've got equities, you have fixed income, you have FX, commodities, and then derivatives of any of it. And they moved at different speeds to, the equivalent of digital banking, which was, e-trading. So equities, pretty famously moved from the pits everybody's got a vision of the Chicago trade floor, late 70s. But you went from that to something that doesn't involve any people, and where you had basically, high horsepower fiber wars through the 80s to see who could get closest to the exchange and therefore, have a latency advantage. But that market went from being 100%, manual. And by manual, I mean, in this case, actually writing tickets on paper and handing them into somebody, to some of it was voice. You still had voice brokers for a long time, to then, principally today being fully automated. Now, wherever the order is coming from, in many ways, doesn't matter. I mean, the orders are then aggregated, often by machine, like by some algo model, and then executed, and you get your fills back. And you can execute not against one exchange, but against, almost any global exchange to the extent that you've got the right credentials. It took a long time for other asset classes to get where equities was. It's not like they immediately, oh, this is great. This is a much better way of doing things. Therefore, let's have everything go to this. I mean, certainly FX was not too far behind, but fixed income has only become electronified in the last 7 or 8 years, really. And I was watching those trends and saying, when do you make these investments? Making the investment too early isn't going to be beneficial because you have, effectively better ways to utilize your capital and your resources more broadly. But when you start to see certain growth rates and say, okay, well, there's actually a big change in the way that people are behaving, in this case, institutional clients, but people are behaving. And then you begin to make the investment. And when everybody makes the investment, things tend to go in that way. So, but it's chicken or egg. What's the right time? How do you do this? And I guess the short answer is the data will tell you as soon as you see, increased growth rates, it's a possibility. That doesn't mean that of necessity the market will fully go in that direction, but it's more probable than unprobable. And now we go to digital banking, and we've seen, those conversion rates. Yes, they absolutely can be tied to client personas. Different segments are moving at different rates, but there's also product considerations, which is maybe not something that we paid as much attention to previously, where we'd say, okay, well, Michael is a 23-year-old new joiner to the workforce. These characteristics mean that there is a high potential lifetime client value, somebody that we're interested in. These are the types of services that Michael will be looking for and the type of journey that we would like to provide them. And you can create a fully digital journal, or I think we're getting more sophisticated now and recognizing that most clients or many clients will still want advice, and therefore building a hybrid digital advice-based client journey is the right answer. But when you look at a product lens, there are some products which effectively are 100% digital and will be. And those may have been preceded by ATMs and services that you could do that way. But then you have mortgages. And regardless of whether it's Michael, who's 23, or somebody, taking out a mortgage for, be it themselves or their kids in their 70s, when you're dealing with something that is that consequential, and for most people, buying a house is the biggest investment that they'll make, you want to speak to people. Even though you don't have to. Like, we could absolutely digitize the entire experience. You're going to want to talk to somebody. So I think the more in tune we get with client preferences, the more we can interface with our clients, the better we can form relationships. And those relationships don't have to be human. They can be digital. I think the better the products we'll be able to offer, and the better we'll tailor our digital experience to client expectation. And it's a process. And I think like everything else, you begin with let's go 100% digital. That's not the right answer. But where we can provide better service to a client digitally, despite the fact that they may be consuming it manually today, it's also our job to show them that and to help them get there.
Fantastic. Do you see acceleration in that journey? Like you rightly said, like it's just not been too that long, right? It's just less than a decade that we're really moving, and it's wiser to move in that way. But let's talk about it. Do you see positive acceleration ramping up?
I do. I think over the next, I mean, we see it right now. Certainly through COVID. COVID probably, not probably, it absolutely accelerated that transformation.
For sure.
Period.
For sure.
Things that people previously would have gone to a physical store for, they don't at this point. But, I don't know, it's not materially different than you switch a phone to another phone and you're like, oh, I'm not used to doing this. So there's certainly inertia that people have to get over. And that's why, as I said, if you can offer a better experience, people will take it. You can say that there are certain client segments that like going to the branch, and there probably are, but those tend to be diminishing. Like, we all have very busy lives, and if we can save some time, we probably will. So I think you've got the demand, you've got the familiarity, particularly, when we look at age groups. But now, digital savviness is pertaining to people. I'm turning 50 this year. It's no longer 20-year-olds. I mean, we're looking at a demographic which is predominantly digitally savvy. So that's no longer, I don't think that's an impediment at this point in time. And COVID just took us there quicker and faster.
I've been trying very hard, and I failed rightly, and I backed off, asking my son to go to the bank and for his banking account. But he's like, why? I have an app. Like, why do you want me to go? And I think after a while, I had to pull back and say, okay, you know what, he makes sense. I've got.
But I bet you, if your son was getting a mortgage, he would go to the bank.
I hear you. Like that's the point. Like, and I think that's a great point that you made. It depends on the product. It depends on the intensity, the investment, and what kind of relationship do you expect with your partner as a bank, as an institution. What about open banking?
Yes.
So again, huge, transformative globally in a number of places, but how implementation and impact in Canada? Like, I think it just stems off of the previous question too, right?
Yeah. So, I mean, I absolutely do not want to come across as, as contrarian in this case. But I mean, I'd ask you the question, is it really huge? So has it been huge? And we look at jurisdictions in which they've implemented this, and generally it is a regulatory implementation, as you've said. In the UK, client buy-in, 20%, sub 20%, meaning 80% of people have not registered to take part in it. In Australia, better, but certainly not, like, we're not looking at 100% adoption, right? You're limiting it to, a certain part of the clientele. And of course, to get, genuine open banking, you need to have much higher rates of participation. So that's one thing. I think in Canada, there's a bit of, at the moment, there's two things happening simultaneously. One is, it's been pushed off a few times now, not once, but, a couple of times. So there's maybe a lack of absolute confidence in the timelines that have been put forth. So we think that, at some point this year, we will have a mandated open banking platform, but that does involve registry, right? Like client registry to say, I want to do this. There isn't absolute certainty on who's going to do that. So I think for anyone listening, if you're skeptical as to whether it's going to happen this year, I'm a little skeptical too, whether that's going to be the case. Now, it will come in, and I do think the industry is beginning to move ahead of the regulation. So we will have something. I think that, again, full disclosure, as an institution that has varying levels of maturity. So we have certain parts of our business and technical stack, of course, which is fully compliant right now. We have very modern messaging. We have good data constructs extending potentially to data products and contracts between platforms. And in those cases, it's not very difficult. I mean, you need to make sure that if every client at the same time requested information, that you could handle that load. So that's important. And then beyond that, it's message formats and so forth. But again, we have areas of our suite, as I'd refer to it, where this doesn't cause any sweat at all. Then there's other areas where it causes a lot. And to the extent that this regulation obligates us to run a better bank, I think it's actually good. I think it's good for everybody. We've of course spoken about this numerous times internally, and more than once people have referred to the Bezos letter, where Bezos sent the note out to supposedly sent the note. And anybody who Googles Bezos letter will find this letter that basically said, you're going to move to APIs or you're going to be fired. We don't operate that way, but that's sort of what open banking mandates us to do. And that's a good thing. So I'm very positive of it, but I'm also very skeptical as to the time frame.
There's definitely a lot of activity on that topic. So, but then again, time will tell. I think we're heading in that direction. Okay. I think we're coming up on a time, and I was thinking, I'd love to hear you, like, what are the trends that you see as a future in the financial sector for Canada? So anything that's you're seeing that's going to be coming our way?
Yeah, that's a great question. A, we operate in a fairly conservative environment. Yeah. B, where, let's say as a populace, Canadians are also fairly conservative. So, the thought of, tremendous revolution in our banking sector, I don't think anybody wants that. Like, the government doesn't want it. I don't think Canadians want that. And the fact that we've been stable through a series of crises that have hit other parts of the world, including our neighbors to the south, quite dramatically. Recently with SVB. These are things that don't tend to happen here. So I think we want to maintain stability. And in fact, we'll probably have a stronger emphasis on, the strength of our banking sector and the stability. And that means that, we need to be very intentional about our capital allocations and invest in the right places and ensure that we're not doing things that are contrary to our risk appetite. So I think that's a trend that's always existed in this marketplace, but if anything, it will accelerate. We will have a need to be even stronger parts of the economy. I think we will see more of a digital war. Like the banks here, we all have digital assets. Some are better in certain spots than others, but I think everyone is going to have better platforms. At the moment, we have two banks that have full digital offerings, ourselves through Simply and more broadly Direct Financial Services, and then, Scotia through Tangerine. Is that going to change? I think it might. I think there's a good chance that it will. And whether it happens through a completely new brand or instead it is sort of a sub-brand like, TD Easy Trade in the investing space. We'll see. But I think we will see more of that, more of those targeted offers. The competition for share of wallet will extend. What we're seeing, we saw it with Scotia first with, Scene Points and how that became, something bigger than just the association to Scotia. And we're seeing Royal move in that direction. I think we'll see the other banks move in that direction. And, again, that moves beyond a bank as a bank to a bank as a part of the ecosystem of your life, the entertainment aspects of life and so forth. So there are three things. The more digital / omnipresent, again, the safer the bank as an institution. And then, quite possibly more directed segments of the bank towards certain client niches and verticals would be the third.
All very positive, I think, just having the stability, moving in all those right directions and everything. So I think all very positive trends that you're reflecting on. Something that just came out of my mind, and I was lifestyle. A lot of telecom apps are turning into integrating so that they want more users, they want more stickiness, they want more coming back and really becoming the mega app for so many things. So do you see that kind of thing also kind of stemming into financial industry?
I think where it makes sense. As I said, that was what Scotia has done was, I think, very forward thinking, where, there is now also an association with the bank and entertainment in a way that there might otherwise not be. And then I think it was actually quite good of them to spin it off as rather than being purely a Scotia product, it's now a product in its own right. Where it makes sense, I could see the bank doing that, but it has to also be beneficial to clients because it could, if it's done in a cynical way where, look, this is the bank trying to make you more sticky, it's not going to work. It has to be genuine. There has to be an offer and something that benefits, our clients. So I think where we can do that, it absolutely makes sense, and we should.
And I think, in speaking for CIBC, is just as a customer also, I think there's so much happening. There's so much support and ecosystem out there, contributing in a lot of lifestyle areas for sports and sponsorships and areas and our culturally and DEI and whatnot. So absolutely, and I think it makes sense. Nelson, I'm sure a lot of our listeners want to connect with you. What would you recommend for them? Would LinkedIn be your choice?
Yeah, I'm not the best on LinkedIn, if I'm honest.
Okay.
Like and part of the reason for that is what's happened is it can become a spam facility, right? And so I tend to log in. I don't log in daily. I tend to log in weekly and burn through it. So yes, absolutely, people can reach me that way. Just bear with me because it might be a little bit before I get back to you.
I think that's a fair one, and I hope you're busy for all the right things and not spending too much time on LinkedIn. That's okay. We're happy with that switch over there. But nonetheless, Nelson, thank you very much. It was an absolute enlightening conversation. Thank you for sharing your deep insights and perspectives, and we wish you continued success. And to our listeners, thank you for tuning in to Behind the Growth, and we'll be back with another insightful discussion soon. Thank you very much, and we'll see you soon.
Thanks so much for your time. Thank you.
Thank you.
Thanks for listening to Behind the Growth. If you enjoyed this episode, make sure to follow along on Apple, Spotify, or your favorite podcast app. This podcast is brought to you by Mobile Live, a team of digital experts bringing intelligence and efficiency to how businesses sell, serve, and save. For more episodes of Behind the Growth, please visit mobilelive.ca/podcast.